So, let's talk about what went down on Monday, November 17th. Wall Street basically hit a brick wall. A deep wave of selling just washed over the markets, and it ended up being one of the worst trading days we've seen in weeks. So, what happened? In this explainer, we're going to break down the day's dramatic drop piece by piece. Let's just start with the big headline number. The Dow Jones Industrial Average plunged by about 557 points. Yeah, a figure like that, it always gets your attention. It was, by far, the sharpest single-day drop the market had seen in a while. All right, so that brings us to the big question. What gives? What on earth spooked investors so badly on this particular Monday? Well, it turns out it was this potent cocktail of anxiety brewed from two key ingredients. Let's dig in. But before we get to the why, let's just take a look at the full scope of the damage. I mean, this wasn't just a Dow Jones story. The sell-off was broad, it was deep, and it pulled down all the major U.S. indices. It really signaled a huge shift in how investors were feeling. You know, the Dow's 1.2% drop really only tells part of the story. If you look at the S&P 500, which is a much broader benchmark for the market, it fell by a pretty similar amount. And even the tech-heavy Nasdaq couldn't escape, dropping around 1%. The takeaway here is crystal clear. No matter where you looked, sellers were in complete control. Now, it's really important to put this into perspective. While it was definitely a painful day, you have to zoom out a bit. Before this drop, the major indexes were still sitting on some really healthy gains for the year. We're talking between 10 and 19%. So a lot of analysts are looking at this as significant profit-taking within a larger upward trend, not necessarily a full-blown reversal. Okay, so what actually caused this widespread sell-off? Every big market move has a story, right? And this one really revolves around two major points of anxiety that just happen to converge at the exact same time. First up, fear factor number one. All eyes were on one single company, Nvidia. You know the one. As the poster child for this whole AI boom that has powered so much of the market's rally, any little bit of nervousness about its future can send shockwaves through the entire tech sector. So with Nvidia's big earnings report just around the corner, investors got the jitters. The stock fell almost 2% on fears that its incredible, mind-blowing growth might finally be slowing down. And this tapped into a much wider concern, that maybe, just maybe, tech and AI stocks, after their massive run-up, were just getting too expensive. In fact, this anxiety was so real that Nvidia alone became the single biggest reason the entire S&P 500 was down for the day. Think about that. And this second source of fear? Well, that came straight from Washington, D.C. and the Federal Reserve. For months, the market has been hoping, praying really, for interest rate cuts. But some recent comments from Fed officials started to sound, well, a bit more hawkish, throwing a whole lot of cold water on those hopes. And you can literally see that shift in sentiment right here in the numbers. The market's expectation for a rate cut in December just plummeted, with the odds falling below 50%. The message from the Fed was being heard loud and clear. Higher rates might be sticking around for longer, and that's a prospect that always makes investors very, very wary. So you take this combination of tech anxiety and Fed uncertainty, and it doesn't just stay neatly inside the stock market. Nope. That fear began to ripple outwards, hitting other types of assets as investors just scrambled everywhere to reduce their risk. And what we saw was a classic market dynamic. Money started flowing out of so-called risk-on assets, things like tech stocks and cryptocurrency, and into traditional safe havens. And on this particular day, the number one safe haven was the good old US dollar. That stronger dollar had a direct impact on commodities. Now, take gold. It's often seen as a safe haven itself, but it actually fell over 1%. So why is that? Because gold is priced in dollars, so a stronger dollar makes it more expensive for foreign buyers. Silver pretty much did the same thing. Crude oil was kind of the odd way out, holding steady as the market tried to balance those demand worries against ongoing geopolitical risks. And speaking of risk-on assets, the crypto market? Wow, it took a significant hit. Bitcoin's price just tumbled, falling below that key $95,000 level and hitting its lowest point since all the way back in May. And it wasn't just the price, the sentiment went right along with it. The Crypto Fear and Greed Index, which is a popular gauge of how the market is feeling, flashed a reading of extreme fear. It was a clear sign that the risk-off mood had completely spilled over, made even worse by concerns about whether there were even enough buyers out there to absorb all the selling. So, After a day of really heavy selling across multiple markets, what are the key takeaways for investors? And more importantly, what should we all be watching for next? In an environment like this, analysts are suggesting a more balanced approach. For some people, that might mean trimming some profits from those high-flying tech stocks and moving that money into more defensive sectors. Others might look to gold as a hedge. For crypto, the advice is really to monitor the situation closely, because sometimes these sharp sell-offs can create opportunities for a rebound. The general consensus among a lot of market watchers is that this probably wasn't the start of a crash, but more of a healthy, maybe even necessary, consolidation. It's a way for the market to kind of digest its huge gains and reset before the next big move. But that final phrase is really important, for now. Uncertainty is still the name of the game. And that really leaves us with the final question, doesn't it? Was November 17th just a temporary pullback in what's been a strong year, a moment for the market to just catch its breath? Or was it an early warning sign, the first tremor of something bigger on the horizon? I guess only time will tell.